Well, welcome everyone. My name is Jack Wingy, president of Real Estate Club here at Miami. First, I would like to thank the Blockchain Club for helping with organizing the event, and a special thanks to Adam for visiting us today. Adam will be giving us his insight on his professional experience as well as real estate and blockchain applications being implemented today. Ashton?
Yeah, so thank you guys for coming out today. The president of UBC, my University Blockchain Club here. We want to thank Real Estate, obviously, for their help in this, setting this up. We hope it's a great event for you guys. You guys learn a lot about real estate and how blockchain applies to it. Specifically, introing Adam. He is a serial entrepreneur. Yeah, so he's a serial entrepreneur, and a few years ago he's a co-founder of Dotloop, which sold to Zillow for over $100 million. He's a founder of Reverse Dot Creative Services, which is a large multi-million-dollar enterprise. He's a founder of Cobworks, which is a shared working space in Covington, Kentucky. And he was named a great leader under 40 by Lead Magazine. And currently he serves as CEO and co-founder of Crypto Properties LLC, which he'll be going and talking to you a little about today. Hope you guys enjoy it. Give it up for Adam.
Thanks for having me today. Can everybody hear me okay? Cool? Okay, I talk loud. So my background is, I grew up in Cincinnati, started buying real estate as a rental thing, mostly low-income housing. I'm from Price Hill, so it's really what I do. So I started buying up condos around Cincinnati, got up to like 10 to 15. It was kind of like a part-time thing, and started working at these ad agencies around Cincinnati. I met one of my co-founders there, who was a technology guy, he's an engineer, he did a lot of Java. We partnered up with him. He met up with Austin Allison, whose idea Dotloop was, and we all got together. We hung out at the Panera Bread on UC's campus for about 18 months and built our first product. We got that in front of a Remax. Remax helped us kind of fine tune it. We raised about $400,000, spent $300,000 on a show, National Association of Realtors Conference in Las Vegas. Got the car from Back to the Future, like the original car from Back to the Future. We got like the best spot in the show. We barely had any working software. Spent almost all of our capital that we had raised on the show. Luckily, the CEO of Keller Williams came by and signed a $7 million deal. So we had almost died maybe 3 times, and then all of a sudden comes along this company who has 80,000 agents at the time, and then 80% of all the business that they do are with other brokerages. So in a way, it kind of multiplied our efforts because we didn't have to hire a big sales team up front, because it was either you faxed or you use Dotloop. And what Dotloop was is we took all of the purchase contracts that used to be on paper and we digitized them for the entire country. So 40% of every deal that's signed right now in the United States is done on our software. And about $4 trillion worth of transactions pass through Dotloop software. So Zillow thought that was awesome and they bought us. And we did that in August of 2015. After that, I bought a co-working space, a big 20,000 square foot building in Covington. We've been rehabbing it over the last couple of years. We bring in startups. We have a bunch of designers and developers that are independent that work out of the space. And it's just big collaborative space. There's young developers, there's seasoned guys, but everybody works together to try to get people's ideas off the ground. And that's the idea behind Koehler. And everything I'm doing is pretty synergistic, so everything's playing together. At the same time, I did Dotloop also started an advertising agency. We do a lot of digital work. We're kind of an off-site marketing firm for mostly like manufacturing companies, people who are mostly sales-driven companies. The old man started the company 150 years ago. He went golfing with some guys. He got a bunch of business. Well, that's not how you do business anymore. You get business because people find you online, and you need to be able to advertise. It's just not something that's in their wheelhouse. So they hire us. We do most of that work for them. So we'll move through here. So is everybody in here pretty familiar with blockchain? Do you know the concept? Do you understand what the concept is? If there's somebody who isn't, raise your hand. Not familiar with blockchain, okay? All right, so essentially, when you hear the word blockchain, a lot of people think that that's Bitcoin. They think Bitcoin and blockchain are the same thing. Well, Bitcoin and blockchain are not the same thing. Bitcoin is just an application that works because of blockchain technology. So it's blockchain at the end of the day is really a database. It's a spreadsheet, but it's a decentralized spreadsheet, and it's open to everyone. So anyone who's involved in that can see every transaction that happens on that ledger, and it's a shared ledger. So when you think of Bitcoin as a network, Bitcoin is millions of computers that are all validating transactions on that ledger. And you need 51% consensus on the network in order to get that transaction to go through. So I'm just going to kind of weave through some of these things here. So there's a difference between centralized database, which a centralized database is sitting on one server, one computer. There's one authority who has access to that, who can change that anytime they want. And then you've got a decentralized option where you have that kind of ledger living on different systems. And there's maybe centralized authority on each one of those systems. And then a distributed ledger would be something like a Bitcoin where you have one ledger, but everyone shares that ledger kind of in the cloud. And then each one of those computers validate transactions. There's no human involvement in one of these networks, which is in the future going to have going to disrupt industries like legal, right? In real estate, there's various different kinds of ways that you're going to get disruption out of that. Every time there's a transaction, there's something that's called a hash, and that hash is recorded in a block. So when they call it the blockchain, a block is only so big. A block is like a megabyte of data, and there's so many transactions that can be put into that block. Once that block is filled, it gets committed to the chain. Once it's committed to the chain, it can never be changed. I mean, it's cryptographically locked up to the point where if you start adding more blocks, and then you want to go back and change a block, one node on the network wants to go back and change a record, they would have to have so much computing power to go back in time and change not just that record, but they would have to change every single big use case for blockchain and cybersecurity. Transparency, obviously, remember, it's a shared ledger. So everyone on the network can see exactly what's on that ledger. So it's transparent. One big thing is, I sponsored an event in Washington, D.C. The head of produce for Walmart was there. They did a test with a blockchain. All of their vendors in their supply chain, once they did this with this box of mangoes. So this box of mangoes, each mango got picked off a tree. Someone added a record that we picked these mangoes off the tree. They went and they boxed them. Somebody put in a record that they boxed them at this date at this time. It got put on a truck. It got put on a plane. Finally, it got to Kroger, and it was sitting on a shelf. They traced all of that with blockchain technology, which is just an open ledger, everybody can see, and every individual that touched those mangoes in that supply chain had to essentially enter a record that they did this at this certain time. So at the end of the day, they took a look at their current supply chain and the way their supply chain worked versus this blockchain supply chain that they created. And they randomly picked a vendor and tried to find out what they did at a certain time. It took 2.5 days to go through their traditional channels, through their blockchain, to find that record. Or not with blockchain, but with their traditional way. They went to blockchain, took 2.5 seconds to track what that was. Now, the implications of that are, say someone got sick eating those mangoes, right, in Milwaukee, Wisconsin. For them to go back and figure out who got sick, why they got sick, what part of our supply chain failed, would have taken 2.5 days. And when you think about a foodborne illness, 2.5 days could mean people's lives. 2.5 seconds is much better, and you can start acting on that a lot quicker. So, Kroger, Safeway, Walmart all got together and created this kind of blockchain consortium. So now they're all working together to try to figure out how to implement blockchain technology throughout all of their networks, because a lot of them use the same vendors. So it's a revolutionary technology when it comes to supply chain. And if any of you plan on after graduation sticking around Cincinnati, one of the big things that we're trying to do right now is position Cincinnati as a supply chain logistics hub. And blockchain technology is going to be something that we can use to leverage the ability to say to a company in, say, Thailand who wants to open a manufacturing facility in Cincinnati, we say, hey, look, we not only have the land, we're close to 75, we have a great airport, we have a river, we have all these ways to get things places, but we also have all these blockchain technology companies that when you move here, we're going to help make your supply chain more efficient. The one thing you can't change about where you're located is where you're located, right? The benefits to being in Cincinnati, you can't pick Cincinnati up and move it somewhere. And the biggest benefit to where we're at is you can get anything from Cincinnati to anywhere else in the country within 2 days. And a majority of the US population lives within like 300 miles of Cincinnati. So you think of all the major cities that are around here. It's so easy to get something from here outside of here. So blockchain technology is going to be one of those up and coming things that people are going to be asking for. When you guys graduate, it's just now starting. I'm being asked to speak at like the state of Kentucky, obviously DC, a bunch of other things. This is something that if you're in the technology space, you're going to want to understand. These are just major networks. I mean, you can see the logos. All these guys are starting to get involved in blockchain. Mainstream adoption of blockchain in the financial world, in real estate. My 2 co-founders for CPROP, they actually did a lot of work with Jones Lang LaSalle on the commercial side. My background is in residential real estate, obviously. And now this is the new project we're working on. So CPROP, you can read the tagline here, a property technology company devoted to delivering blockchain-enabled solutions that improve the efficiency and profitability of the real estate business. So we founded this in 2017. One of the reasons we founded this is we all got into crypto around the same time. So has anyone heard of Ethereum? So Ethereum, smart contracts, that's one of the big disruptive technologies when you think about legal, right? You think about contracts. You always have to have that lawyer involved. One of the good things about blockchain and smart contracts is it gets rid of that intermediary. In real estate, we're working with a company out of Turkey called Zingit, and it's like the Zillow of Turkey. They told us that if you were to try to buy a house in Turkey, you have to put up your escrow money, which is pretty much a good faith money, right? Hey, I really want to buy this property, take it off the market, here's $5,000, right? There's a 15% chance that if you give that money to a lawyer, they're going to run off with it in Turkey. And Turkey's not even the worst country. So one of the things we're trying to do is we're trying to standardize the process of purchasing real estate internationally. Another one of our partners is in China. They're called Juai. They're like the Zillow of China. They're huge. The biggest deal flow in real estate is coming from China to the US. There's a lot of Chinese buyers who want to get their money out of China and into a more stable economic situation. And real estate is one of the most stable assets that you can own. So how do they do that? I'm a Chinese buyer, I speak Mandarin, I'm trying to deal with an English-speaking US broker. What we've done is we've created a button, essentially, that sits on the listing. So I'm a Chinese buyer, I go into Zingit, or I go into Juai's website, I find a property in California, I love it. I'm like, this is a great property, I want to buy this property. Click on help me buy this property, a list of real estate agents pops up that are vetted by us, and you can use filtering tools to go through and say, I want to find a Mandarin-speaking agent in California who can help me buy this property. Great, now you found someone who can speak your language, you can communicate, but what about all that documentation you need to sign? What we're doing is we're digitizing all of the documentation that you need in order to make that transaction go through. Right now, the real estate agents run around trying to find all this paperwork, and they don't know how to get the deal done, and it takes forever to close. Maybe this buyer decides, it's not worth it, I'm done, right? time kills deals. That was our tagline at Dotloop. Time kills deals. The faster you can get this transaction done, the happier everybody's going to be, and the more deals you're going to be able to close. So this is a big deal. If I'm an agent and I'm in Manhattan, I want these international deals because that's a hot market for people to buy property. If I'm up in Vancouver, hot market. If I'm in Malibu, hot market. Does anybody trade crypto? Anybody into crypto? So you know how everybody says they want a Lambo, it's going to the moon, we're gonna be rich. One of our partners, she sold about 11 properties so far on just using crypto, just using Bitcoin. The first property she ever sold was in Malibu, and it was this ultra wealthy guy. He had $17 million in Bitcoin. He wanted to buy a house. So he goes to buy the house. Process took so long, at the time Bitcoin was going up. By the time the house sold, the guy had enough money in Bitcoin extra that he could buy a Lambo for his house. That's where the Lambo thing comes from. This is what I hear. So that's really what we're mainly focused on, are those international deals. And when you're talking about international deals, trust is always an issue. With blockchain, the trust really isn't an issue because all of the documentation, everything is programmed in a way with smart contracts that once I sign this, it triggers another event. I get a message on my phone that now I need to sign something. And then with the blockchain, because everything's hashed and it's put into the chain and it's committed to the blockchain, all of those records are there forever and nobody can change them. So we know who signed what, when they signed it, there's no loose paperwork running around, everything's in one system. So the big benefit of using a blockchain for this kind of stuff. Some of the things we're working on right now, I'll actually zoom through these a little bit. RTX 21. So we have a deal with these guys in Frankfurt, Germany. There's a wealthy commercial real estate owner. A guy's a billionaire. He owns a bunch of property in Frankfurt. And it's nicknamed Bankfurt because that's where all the money is in Germany. So he owns a bunch of commercial real estate. The problem when you're in real estate and you own real estate is you're not liquid. All your wealth is tied up in this commercial property, which is a bad thing, because what if I need to go out and buy some more property? A great deal's out here and I'm going to take advantage of it. Why do I need cash? So blockchain and tokenization is the term that people are starting to use. Anything in the future, this is the same, anything in the future that can be tokenized will be tokenized. If you want to own a piece of a classic car, we could tokenize that classic car into many, many pieces, and you could own a third of the car, Jay Leno could own a third of the car, and somebody else could own a third of the car. Because you don't have maybe the $250,000 to buy that McLaren, but you might have some of that money. You still want to own it, but let's tokenize it. Real estate is what we're doing here. This guy has billions of dollars in commercial real estate. He wants to take, say, one of his buildings and tokenize it, which means, say the building's worth $100 million. We create 100 million tokens. Each one of those tokens represents $1 in value. So I could tokenize 40% of that, which means I essentially sell 40% of the value of my property, and then I get all the cash, the investors get all the tokens, and there's an exchange like Fidelity or Schwab or one of these other things where you can actually trade these tokens. So tokenizing assets makes things more liquid. And liquidity is what you're after. I don't want to be stuck owning this property and wait years and years and years for it to actually sell. I can take my tokens, go on the exchange with them, find another investor who wants to buy them and sell them right away. It's very similar like a Binance or Coinbase or something like that. There's an open market for ownership in these. And it's very similar to a REIT. Do you guys know what a REIT is? Real Estate Investment Trust? So a real estate investment trust is a package of real estate. And it can be hundreds of properties in that package of real estate. But that REIT would trade on, say, the New York Stock Exchange. So I can kind of be liquid in that way if I want to own a REIT. The problem with REITs is you might only have 5 or 10 really good properties and the rest of them are crap. Well, I just want to invest in one really awesome property. So if you tokenize that property and you put it on an exchange, here I come, I could just buy 10 shares of that. And now I can own a piece of that. And the income that's being earned off that building, I can be paid in additional ownership. So this guy we're working with, he's going to keep 60% of the ownership in the property, but he's going to sell 40%. So that 40% can be traded openly on a market, on an exchange, and at any time he can start buying back those tokens if he wants to. But in exchange for those tokens, people have given him cash. Now he can take his cash and go invest it in another development. And then that development makes money. But the reason you would invest in his property is because that property is earning income. There's renters, there's retail space that people are paying for, there's a Starbucks in there. All those rents get paid out in additional ownership. So every token may receive 1/100th of a token as a dividend every month to pay them for their ownership and for the income that the building is earning. So over time, you can actually earn more of that building. Instead of getting cash, he gets the cash, and then he just gives you more tokens. And then he can go invest that money. So we've got a deal with these guys. They're working on raising $3 million. They're actually an investment bank. This Axit Capital Partners, that's actually our client, and the platform that we're going to build is called RTX21. And our company is actually going to build software that is the exchange. We're doing a pilot right now in Tampa. We're working with 3 RE/MAX offices down there. This is more about data and not as much about the blockchain technology. What we're doing down here is, if in Tampa right now, you take a stack of papers to a seller and you say, hey seller, I want to get your house on the market. I want to get it in the MLS so that other people can come see the property and buy it. But I'm going to bring a stack of paper and ask you a whole bunch of questions about your house. Then I'm going to take this stack of paper back to my office, give it to my secretary, and the poor lady's going to sit there and type it in. So all we did was we just took all that information and put it on an iPad. Now the realtor goes to the seller and says, hey, let me ask you all these questions, ask them the questions, and then it automatically connects to the MLS and goes up. The reason we're doing this and the reason we're doing CPROP and that platform to close these properties is we're collecting data the entire time, right? And anything you guys do, if you decide you want to start your own business, everything's about data. Everybody wants data because advertisers care about the data. And look at Facebook. Millions, billions of people on Facebook, right? What's the most valuable part of Facebook? It's the data. The advertisers pay to understand who you are so they can target you with ads. We're going to do the same thing. So we talked a little bit about the cross-border transactions. It's just a bunch of white papers we have. This is about me and my co-founders. So what we want to do at CPROP is we want to collect the early data. So we partner with brokers, and the brokers, they want ease, right? They want things to go faster for their realtors. So we've provided them with this technology, and in exchange for that, we get the data. And then we monetize the data later on. So now we know this house is going on the market, the roof's 20 years old, probably needs to be replaced. There's patches, holes in the yard, probably need to call ChemLawn at some point and get that fixed. So you've got that data. Then with our platform that you can actually close the property on, everything goes through the process. I sign a document, you get a notification, you sign your document, everything goes through, house closes really quickly. Well, now we know the zip code that house is in. We basically know the demographics of the people. We understand what financial situation they're in, how much money they make, for the most part. We don't take any like private data and say, hey, it's Bob Smith. But we kind of know who these people are. We know what area they're in. So what we're going to do then is we're going to say, hey, Home Depot, would you want to send these guys a coupon for $50 off? Oh, they bought a house for $800,000, $500 off. Oh, they bought a $2 million house, maybe it's a $5,000 off coupon. So we target those ads directly to these people based on information that we've collected. We also know that that roof was old. Oh, roofer, local roofer, do you want to pitch something to them? And everybody has to opt into this. We're not just going to do it for every single person without them knowing. They opt into it and they accept these ads because they're going to get awesome discounts. On top of that, some of the best data that the government collects to determine how well our economy is doing is home data. It's how many houses are being built, how many houses are being sold. It's an indicator of how well the economy's doing. If we can get this thing built and we can get mass usage of it the way we did with Dotloop, well, now we have the most accurate, updated, real-time data around where things are selling, and then the government can use that data and pay us $10 million or something. So that's kind of what we're doing, and these are some of our members. Pure Chemist, he's out of Slovenia. He's a huge blockchain developer, well-known guy. If you're familiar with PureCoin, he's the lead developer on PureCoin. Jesse Sestito, he's one of my co-founders' brothers. He lives in Busan, South Korea. He kind of handles the whole East Asian market. Sala, he's out of the Middle East. We're actually working with the Saudi government right now, trying to do some blockchain stuff for them, their land records. Aaron Wickman, James Keeney, Troy Davis, all software engineers. So that's kind of it. Hopefully all that made sense. I kind of whipped through it all. But if you guys have any questions, happy to answer.
So your business model is using data that you get from these sales and then selling that data to other companies.
Mm-hmm.
What blockchain are you using for this? And like, I guess the data is not public on the blockchain, or else they wouldn't need to go through you to get it.
Yeah, no. So there's, the hashes are public, the data's not public, the data's off-chain.
Okay.
So all the public information is about like the transaction. So say somebody wanted to look up a particular transaction. They would go on the chain, the hash would be there. They could click on that hash, but then they would go to a centralized server where they would have to put in a username and password in order to access that data, right? The data's there, but they would have to kind of go through a process in order to access the information.
Okay, yeah, that was gonna be my second question. Like, so it's all stored on your servers, and it's not encrypted on.
Yeah,
IPFS
but
or
our
something
clients
like that.
who have actual access to that data, they want to know that that data is truthful, and they want to know that that data is validated. So they would need our blockchain in order to make that happen, but they would have secure access to just the data that they have access to. So they don't need permission for that particular amount of data.
Yep, and then with the hash, they can verify it. Yep.
Exactly.
So what is the broker's relationship to your company? Are they your client?
Yeah, the broker's the client. So just like with Dotloop, it's a lot easier to sell a broker and then let them get the real estate agents buy in. So the broker, here's the thing. Has anybody heard of Purple Bricks? It's a real estate platform. They charge you a flat fee, and it's out of London. And there's actually some competitors here now called Redfin, and there's another one. But they're like a discount brokerage. And what they do is they charge you a flat fee, $2,500 to list your house. It doesn't matter how expensive or cheap your house is, $2,500. They'll list it, and they do almost everything a traditional broker does. They'll come out and take pictures, they'll post them on the MLS, they'll do everything for you, right? It's eating into the profits right now of traditional brokers. So your Remaxes, your Century 21s, all those guys, they're gonna get killed. This is a game changer in the industry. And you're gonna see more and more of these guys and less of the Remaxes and Keller Williams, or you're gonna see them start to change their business models. So the broker understands that, they see the writing on the wall, and they're like, how do we add value? What do we do that's gonna help us out? Well, right now, their realtors have relationships with local vendors and things like that. What they wanna do is they wanna make money off of that, right? Sometimes these people go to the realtors, sometimes they don't, right? Sometimes they say, hey, do you know a good furniture company? The realtor says, yeah, here, right? What we want to do is create a process for that so that the broker gets paid and then the broker makes money off of that. So we're gonna help them add value to the experience of using a full service brokerage versus going to a Purple Bricks or something like that.
So the broker is invisibly giving them all these extra services?
Yep. Yeah. And it seems like just an added value thing on their part, but yeah.
It is intentional.
Yep.
You mentioned tokenizing a commercial property to like make it more liquid for the investor. How do you convince an investor to join this like modern movement opposed to going to his local private equity firm and just investing like 10% in their portfolio?
So the problem is you don't have access to that. Like when you invest that money, you may not have immediate access to get that money out. Plus, what if you're not accredited, right? So the hope is, and you know this from trading crypto, the SEC kind of got in the way of a lot of this stuff, right? You couldn't invest in crypto unless you were an accredited investor, which really sucks for a lot of people because what can you invest in if you're not accredited? And being accredited means you have to have over $1 million in cash in the bank or earn an income over $250,000 a year. There's not a lot of people out there. So what do people who are not accredited invest in? Let's see. Lottery tickets, right? Like that's a big one. Casino, right? So the government says, oh, you can go down to the casino and blow $500,000, but you can't invest in crypto. You know, you can't invest in a portion of a building, right? I want to be able to do that, right? I don't want to have to be accredited in order to make good investments in property. What tokenization does is, depending on your jurisdiction, so in Germany, you have to be accredited still. But I can go in and I can buy just a portion of a building that I like. I can pick that building. And there could be other properties on this exchange that I can invest in. But I'm investing in just one property. And then I'm earning the income off of that property. If I go through a third party, that third party is getting a piece of that. With this, there is no third party. With this, you get the income. So you're earning more ownership in the building over time. And then at any time, I can just sell those tokens to another investor. And the reason these investors want to do it is because it's liquid. It's a lot more liquid than going in with 3 or 4 other guys and building a building, right? Which is what a lot of people are doing now. But I could just go in and say, hey, I like this property. I want to own 1/100th of it, or 1/1000th of it. And I want to own 1/100th of this building. And it just makes things a lot easier to trade back and forth. Plus, on the exchange, you're going to get tax records and things like that of all your trades, just like you would with stocks. So,
how is someone unaccredited gonna have like the correct education to invest in the right things?
they're going to the casino now. I don't know. They're losing money there, right? You're guaranteed to lose money. You're guaranteed to lose money in the lottery, right? And that's the thing. Like, so the government says that, right? But we've got the internet now. Those laws were created back in like the 50s and 60s. When, you know, when I was a kid, we had to go to the library and get in the card catalog to research stuff. You guys could just like, right now, right? It sucked. So it was really, really hard to get that information back then. Now, if you want to research something, you could just get online and find the information. You could talk to other people. You could chat with people. You can get on and find, there's going to be a star rating potentially, right? So you can use crowdsourced referrals to find out if something is valid investment or not. Has anyone heard of Fundrise? So Fundrise is essentially a way for you to invest in a basket of development, right? So if you're a commercial real estate developer, you can go to Fundrise and say, hey, I got a project. Here's my drawings, here's 3D renderings, here's all this stuff. Here's what I think it's going to earn. And then you can send that to Fundrise, and then they'll package that with a property in Denver, a property in Phoenix, multifamily building in LA. And then you can invest in that. And it's a way for developers to get money, and then you just earn interest on the money you put into the project. But again, it's not as liquid, and this is when tokenization comes in handy.
So obviously the commercial real estate market tends to change slowly compared to other markets.
Mm-hmm.
How do you feel the market sentiment is right now for a technology like this?
It's good. It's really good. So overall, real estate is the worst.
Yeah.
And I think real estate is slow to adopt the technology because most people don't get into real estate because they're into technology, right? Otherwise, they'd be doing something else. And for whatever reason, these guys, 90% of the agents don't do anything. I mean, they may sell 1 or 2 houses a year. So you're trying to convince a guy who only sells 1 or 2 houses a year to spend money on this new software, right? And it's just not going to happen. They just don't have the money to do that. In commercial's always looking to adapt. We had all these guys coming from all over the country from Old Republic Title. Old Republic Title, I think, is the 2nd largest title agency in America, and they have 36 different lines of business. Their 2 biggest lines of business is title, obviously, and warranty. One of the reasons they want access to our data is because now they know what's going to break in your house, and they can sell you a warranty on some of that stuff. So it helps them make better decisions. But Jones Lang LaSalle, my 2 co-founders used to work for Jones Lang LaSalle. here's a project we're working on. It's called the tokenization, or it's actually a Carfax for buildings. Everybody familiar with Carfax, like how Carfax works? So, okay, I'm the maintenance guy in this big commercial building. Every time I go do something, right? I go over here and I fix this microphone and I fix, this chair. I write that down on a clipboard. What did I do today? I fixed a chair and a microphone, right? Imagine in the future if we have blockchain records of this and they're tied into IoT devices for commercial real estate. There's a furnace in this building, right? The maintenance guy gets a message on his phone from the IoT device on the furnace that recognizes the furnace is shaking a weird way. It says, hey, maintenance guy, guess what? The furnace needs to be fixed. I think it's the motor, right? By the way, you can go on Amazon right now, order this part for this much money, and it'll be here this time, right? Every time something happens, it gets recorded in a blockchain, right? So it's there forever. And when he finally gets that part, he goes down to the furnace, puts that new motor on there. Now it's running fine. The IoT device recognizes it's running fine, so he must have fixed it, right? If I'm Colliers and I go to Jones Lang LaSalle and say, I want to buy this building, show me the property records. I want to see what's going on here, what's been fixed, what's a hot mess. Like, I want to know what's going on. Right now, you get a bunch of clipboard paper, right? I could just have a database of validated transactions that were put in on the blockchain and tied into IoT devices that recognize that part was changed and updated that record on the blockchain. Now, I don't have to trust, Joe Repairman. I know the stuff got done. So in that regard, that's something that, when it comes to blockchain and immutable records, that's something that Jones Lang LaSalle and a lot of these guys are starting to look at. And that's something we're helping them actually work on.
So going back to the tokenization you were saying, does it can the token change value with the property? Like, let's say.
Totally could.
So that's how it would work. It would change with the property.
It would change with the value of the property, but things are worth what the market says they're worth, right? So Beanie Babies at one point were worth a bunch of money, right? Now they're not worth crap. Bitcoin was worth $20,000 last year. Now it's worth $38.50. Things are worth what the market says they're worth. The benefit to, in this case, tokenizing real estate is, and the reason this works for real estate is, the value of real estate stays pretty stable. Plus the guy we're working with is going to hold a majority of the tokens. So one, hopefully you have tons of investors. Say you have thousands of investors in that 40% that they own, right? For one person to hold enough tokens to really influence the price would be difficult. And those things are regulated. So FINRA, which is like a regulating body in Europe, they keep an eye over all this stuff, even the tokenization stuff. So say we put something in place that says one individual person can't own more than 2% of all the outstanding tokens or whatever, right? There's things that would eventually get put into place to kind of control the price and keep people from manipulating things. One of the biggest problems with Bitcoin and the crypto markets right now is that there's just not enough liquidity. There's not enough money. So one individual person can influence those markets. And when you say, hey, you got to be an accredited investor to trade this, you got to do this, you're limiting the amount of people that can come into the market. And they say, it's too easy to be manipulated. Well, that's because we don't have an ETF. If we had an ETF, you'd have millions of people being able to invest in crypto or Bitcoin or an asset like this. And the more people you have, the lower chance that you have of, bad actors in the system.
Is it the owner of the property that chooses whether on this tokenizing they pay out a dividend or not? Because it sounds like they're giving up more ownership if they are giving.
It is, but they're getting cash. And if you're a good business guy, you know what to do with that cash.
If you're given a dividend, like let's say it's 1 in 100, using your example of a $100 million company, so you give 40%, 40 million. If each of those tokens gives out a dividend, that's 400,000. Are you getting that 400,000, or is it just 400,000 tokens that you may
You're
own
keeping the
given
cash
out?
because Starbucks is down there, Panera Bread's down there. They're paying your company in cash, and then you're just giving them. You have that 60% of tokens. You're keeping the cash, and then you're just giving them what you told them you would give them, based on how much profit that building made. So the dividend's going to change for every token. So I invested in a thing that was called Taz. And what Taz did is, Taz invested in a bunch of other crypto companies. And every quarter, however profitable they were, we got more Taz tokens, which meant more ownership in all these other cryptos. So instead of me going out and investing in just one crypto, I was invested in like 20 of them or whatever at the time. So those dividends are going to change over time. And you can essentially decide based on how much money you're collecting, how much you want to pay out. But it doesn't have to be that way. If the building isn't producing anything, then you don't have to worry about it.
Okay.
So you're just investing in the equity going up over time, which is another thing, right? So
you're getting the dividend in the currency of whatever token you're using? Like, would that?
it could be something completely different. If,
Not cash?
or it could be cash. Yeah.
It wouldn't dilute the equity at all, or it wouldn't change the, like if you divide by 1% and someone else owns 99%, if dividends are paid out over time, it's not gonna change.
So the person, the ownership, the person who owns the building, he's the one giving up more of his equity in order to pay off these people. But he's getting cash from the tenants in the building.
Okay.
So he's earning cash, and he wants that cash. Because right now, I've got a building I'm sitting on that I own 100% of, but maybe there's not a lot of equity in that building. Say it's your house. Here's another thing, affordable housing, right? A lot of your parents, they wanted to raise you guys in a good neighborhood, right? They didn't want to raise you in Price Hill like I had to live in, right? Your parents were like, man, there's a $750,000 house in a nice neighborhood. I really want to send my kid there, but I only got approved for $400,000. Say there were investors who were like, yo, I'll put in the other $300,000, you can move into that house, and I'll sit back and wait for that thing to appreciate. And then when that house ever sells, I'm gonna get paid. That's another, yeah.
So you said you work with an investment bank in Germany in tandem in creating this. So do you see any significant difference between like a traditional underwriting fee to take a company public and sort of tokenization fee to take a property or building?
Oh, so much less. Yeah. Yeah. Oh yeah. Oh yeah. There's products out there now that I went all over the world talking to all these people. We were pitching C-Prop. We did an ICO. We were going all over the place trying to raise capital for this thing, right? And we met so many companies that are doing things like this. They've already got the platforms ready to roll, and they can tokenize anything. And it's really a matter of regulation. So it's a matter of like getting with FINRA or the CFTC or the SEC and making sure that everything's registered, right? What happens is everything goes into trust, right? So when tokens are traded, you don't want to have to like change the title every single time, right? So if everything's in a trust, the trust owns 100% everything. It's just different people own different levels of the trust at different times, so.
With the liquidity issues in real estate, how does giving up your equity, how is that better than taking out a loan on a property?
Depends on the interest rate of the loan, right? Like, if I go to a bank and I say, hey bank, I'd like to take, 40%, chances are they're not even gonna, unless there's no equity in it. Like say you've got a $100 million building, maybe, you owe a big chunk of that, right? The bank's only gonna give you a percentage of that. Plus they're gonna charge you some crazy interest rate too. If you're gonna take that much money out of the bank, that also goes on your credit. Now you've got a loan that you're responsible for. And, instead of saying, hey, I've just broken this thing up into a bunch of tokens and other people own a portion of this building, I get a 7 or 8% interest rate. I don't have an interest rate on this. I can tokenize my building and I'm not paying these people any interest. I'm just paying them a percentage of the income off the property. So if I try to borrow $40 million and my interest rate's 7%, that's a lot of money.
I mean, do you have the option to buy it back though?
Totally do. There's an exchange. There's an open exchange that things are being bought and sold all the time. And I could go on there with this cash after I sell all that stuff. I could go and just buy it right back up if I wanted to. So,
what are the requirements to tokenize?
It's long. That's one of the reasons we have Peer Chemist. He's one of the guys that kind of manages a lot of that stuff. One of my co-founders, he ran a $100 million clean tech fund out of Asia for 10 years. He's our finance guy. And he kind of deals with all that stuff. That's not really my thing, my
Yeah.
world, but it's a lot of dealing with the government. Whatever jurisdiction you're in, it's kind of dealing with that. So, and plus you have to be on a registered exchange. So when this exchange is built, FINRA and all the governing bodies of that jurisdiction are going to have to approve this and say, yes, this is a place to trade. Similar to like a Fidelity or something, if you wanted to trade stocks on that platform.
Yeah.
Do you have a question? Yeah.
So with your investor in Frankfurt, so he's supposed to own 60% of the tokens, right?
Mm-hmm.
So what's stopping him from selling that other 60% and like kind of cashing out for a premium on his tokens?
It's the regulation. It's the governing body that regulates that exchange and then regulates what he actually does with that. So, like I said, everything's in kind of a trust too. So he doesn't really have control over that trust, right? It's a third-party instrument. So, do you have something else?
If you're an investor and you give the owner of the building cash and they give you tokens, what's the benefit to the man getting the tokens?
So, say that again.
Like,
So,
if I'm buying a building and I tokenize the building,
mhm.
and I get cash from my investors and give them the tokens, what's the benefit to the investor on the other side?
Liquidity.
Okay, so what can they do with those tokens?
Well, either you can sit on them and earn income off of them,
Okay.
or you can just get rid of them at any time.
What do you do when you get rid of them?
You just put them on the exchange for sale,
Okay,
and then another investor comes and buys them up.
okay,
So when we first build this thing, you're not going to have a ton of investors on the platform. We may have like 100 or 200 investors that get on the platform. But those investors are active there, right? And they're constantly making deals. It's just like anything. It's just like the stock market, right? You want to sell your Amazon stock, you sell it 5 seconds later, it's gone, right? Because someone on the floor of the stock exchange was able to make that trade for you, right? Or the computers were able to make that trade and match you to a seller. Same thing. So,
What determines the cost of the token then? Because if there's no, I mean, how much value can you earn off of a real estate building because there's no way that you can necessarily improve it? Like if it's a huge, massive building, right, and you're renting out to various tenants or whatever, how does the value of a token go up based off the value of the
appraisals.
So it's just you hoping that the value of the building increases over time because of the location?
It's the same with any real estate investment now. Like if you go and buy a house right now, you're hoping that the value of it goes up over time, but all of a sudden a dope dealer moves in next door and the price of the house is going to go down, you're screwed, right? Same thing. Like these properties that we're tokenizing right now are in downtown Frankfurt, which just continues to rise in value. One problem in real estate right now is we're kind of potentially in a bubble. So commercial always kind of sticks around and does the same thing. But residential is a lot more volatile. And the reason these guys want to do this is because it's commercial, because it adds more liquidity. This is actually something that investors have been asking for a while. There just hasn't been really a tool or a mechanism for them to get more liquid in the properties. And the overall idea behind all this is liquidity. So it's how can I, if I need the cash, get rid of this now? Because right now, if I own a portion of this building, I just have a sheet of paper that says I own this building. And who do I sell that to? There's no exchange I can sell it to. I got to go find another investor who's willing to buy that share from me, or go back to my other partners and say, hey guys, I'm going to get out of this. Will you buy this from me? Well, then we have to do an appraisal to figure out how much the property is worth, right? It's the same with this. So the price can change over time. The price can fluctuate potentially based on the demand of the token, or you can fix the price based on an appraisal. And then you could say these tokens are pegged to the value of this property, and there's 100 million of them, so each token is worth this much.
So if you were to issue 50 million, each token would be worth $2. So it's basically, it works the same way.
Yep, and then you get it reappraised 5 years later, the building's worth 150 million. Now all of a sudden the price goes up, right?
So if you sell like more than half of the tokens of the property you own, that means that you still the owner if you own another share, or who owns it?
Yeah, so the trust owns the whole thing. The trust owns all the tokens. So whoever owns more than 50% of the tokens would be the owner.
You may have mentioned this before, but what are some potential barriers that you have to overcome before you're able to adopt this?
So it's being adopted now.
Oh,
It's all legal, right? It's funny, but Senator Warren Davidson has proposed a bill to Congress that would make tokens, instead of tokens being considered securities like they are right now, they'd be considered property. And the whole goal of this is to, when you trade crypto back and forth, make it not a taxable event. So if I've got these tokens that I'm trading all the time, I would, right now I have to keep track of all that, right? And then say, hey, this is how much I made off of these tokens, right? Now, in this case, there's actual property, there's something of value. But with a lot of crypto, you know, there's nothing behind it. You're just trading speculation, right? And that's just kind of the way it's set up. So I'd say the biggest thing right now is probably, it's legal stuff. It's just, you know, our government, the German government, all these guys and what they say we can do, right? So you've got people on both sides fighting for both things. Some people want more regulation, some people want less regulation. But without regulation, none of this stuff is going to work because you're not going to get mass adoption of something that isn't regulated.
If people that have your tokens to your building get nervous that there's a recession coming around and want to sell their tokens, what happens to the value of the building and the value of the token?
So again, the value of those tokens is pegged to, like, say, an appraisal.
And it doesn't change.
It doesn't have to. No. This isn't. It wouldn't be like a stock or whatever where, you know, there's just not enough. There's not enough investors to do that, right? Now, if you said, you know, hey, we've got 1,000 properties, right, on this exchange, and there's, you know, 10 million people trading on it every day, then maybe you could do an open market. But there's really not enough people because there could be fraud. Like, people could manipulate the system. Because if I'm a billionaire, I could easily go in there and drop the price or whatever, you know. But there is no buying and selling. Like, you don't have a fixed price. Like, there is a fixed price, so you know how much tokens are. So if I'm going to go in there and buy 1,000 tokens, I know they're $1 a piece. I'm just going to buy them. So.
With the tokens, I mean, where's your profit coming from?
A percentage of the transaction. So with Bitcoin right now, like, Bitcoin gets a tiny, tiny, tiny bit of every single transaction that goes through. Fidelity, they get $7 for a trade. This would be minor cost. It'd be like 1/100%, something really, really crazy. It's like something really small. But those things are trading constantly, right? That's the idea. They're trading all the time, so you're just keep making money, right? Once you build the exchange, plus everyone who lists their property has to pay the exchange essentially a fee to do that, the listing process.
Are they zero-net properties, or like what happens if a property would default and 40% of the holders are they liable?
Yeah, it catches on fire, some crazy stuff happens. Yeah, I mean, that's a risk that you take with anything right now. So yeah, but I mean, the idea would be that if you had a good property, you would get listed. So there would be some kind of a process people would go through, and they would have to submit financials and things like that. Just like if you were going to go for a bank loan, right? You have to submit a rent roll or whatever you've got, and we could decide to list you or not list you.
Yeah, so I'm kind of, I don't know. It seems that you guys are getting a cut of each transaction, and each address has its own blockchain. So that means that you guys are getting a cut of the equity for every property you're listing on your exchange. Is that the
in a way, we could, if we wanted to, we could get a portion of the ownership. Right. So that percentage is a piece of the token. So we, and you know, I mean, a token can be broken up. It is infinitely divisible. So you can have 1/1,000,000th of a token sometimes, right? So we can get tiny, tiny bits of ownership in that building every time transactions happen. So.
Do you guys have like a projection date when you think it'd be?
Yeah, we've got some stuff up here. So we've got kind of a schedule that my co-founder put together. So we're doing all these pilots right now. What we're talking about right now is the RTX-21 pilot. We're doing that now. The Germans just need to raise $3 million because it's going to cost. For us, it's going to cost a little over $500,000 to build the platform, and then they need the rest of the money to kind of market to investors. So it's kind of up to them right now. They raise that first $500,000, we can get working on the platform, and then as more money comes in, they can advertise. Tampa pilot's going on right now. CPROP token, we still want to list that on exchanges. So we did our token sale, it finished up at the beginning of the year. So we need to get our tokens listed on an exchange at some point here. And then who knows what happens. I mean, every startup, you pivot, right? Like, you're constantly pivoting. We're working on a lot of different things to see what kind of works. And if the RTX 21 thing works, great. Now we've got a case study. We can go out and we can sell that to other people like RTX 21.
Is there a reason that you're attacking Florida mostly?
We went to a conference in Miami, and we met the guy who owns all of these RE/MAX offices. We also have, he's got a partner who's also a RE/MAX agent in Indianapolis, who does twice the business he does in Tampa. The guy in Indianapolis says, hey, if it works in Tampa, we'll do it in Indianapolis. So it's just kind of like relationships, right? And yeah, I can't speak more highly. If any of you guys ever do a startup, just whatever industry you're in, go to a show, talk to people, meet people. That's how we pretty much got all of our business. We went to Inman, the Inman News Conference, which is probably the second biggest real estate conference next to the National Association of Realtors Conference, which happens mostly in Vegas. This Inman News Conference was huge, though. I mean, you've got Simon Sinek was there, a bunch of other people, but it's worth paying the money to go to good conferences, to get in front of people. And then if you can get on a panel, or you can speak at all, that's the key, because then you position yourself as a thought leader. And then everybody comes up to you afterwards and asks you a bunch of questions. So,
So what kind of assurance do like token holders get they'll fairly receive their dividend?
So smart contract. Ethereum, if you're familiar with Ethereum. So Ethereum it's pre-programmed, right? So the idea is that whoever has however many tokens, we know we can enter the profit in on one end. The smart contract is already programmed to distribute whatever we decide to all those token holders in a specific way. There's no real human involvement outside of putting the amount of money into the system, which is regulated. So smart contracts are the thing.
All right. Well, thank you guys so much for coming out. Give it up for Adam. Yeah, feel free to stick around and ask more questions. Jack, you have anything to say?
No, thank you everyone for coming.